Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Joe Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Cucchiara.
Welcome in. Good afternoon, Joe Cucchiara with Real Estate Radio Live. So nice to be spending the afternoon with you, and also a little sad at the same time, spending the last live show, and a lot of great memories, great station, great group of people, great support. Great audience, great participation. It's been really fun. 6 years, hard to believe, 6 years of Real Estate Radio Live, and we will no longer be doing the live shows. But again, just want to remind all you out there, we're not leaving you. We are going to be doing daily podcasts, so you'll be getting all this same information you get via the airways. Only difference is you could pick it up via podcast. So we'll continue to let you know. If you want to go to reradiolive.com, make sure you download the app. That'll allow you to get the podcast, or go to iTunes, Stitcher, any of the normal places where you get podcasts. You could make sure to follow the show and listen to us at your convenience anytime you wish. So really today's show is more about just giving you some information, maybe an update on the big election yesterday. I want to talk a little bit about what does it mean. To me, there's always over panic. There's always exaggeration. That's just going to take place no matter what. But I want to talk a little bit today about what it means for real estate and what it means, I think, what it means for interest rates going forward here in the Trump administration. So we'll talk a little bit about that. But also want to just throw out there, since it's the last live show, if you have any comments, thoughts, give us a call, check in, let us know what you think about the show. I've gotten hundreds and hundreds of correspondence over the last several months, and on, over several hundred over the last 6 years, just of great responses from a lot of people that have got a lot from the show, and it's good to know. It's good to hear, because our focus when we started 6 years ago was to provide education information to the consumer to help you make wise decisions in and around your real estate, and we continue to do that, and we've had a great group of people that have been on the show with us. As you know, Mike D'Ambrosio had done the show for, my gosh, I think he's been on it for 4+ years, doing it on Mondays. And then I teamed up with Bobby and Buddy every Friday for the last 3 or 4 years. That's been a lot of fun. So you've had Bobby Decker and the team on every Friday, and then Mike D'Ambrosio representing both of them real estate respectively on Mondays and Fridays. It's been a lot of fun. Great people that will continue doing the podcast. Again, nothing will change other than the fact that you just won't be able to hear us live from 3 to 4. So make sure you download the podcast and follow the show that way. If you want to check in, call. If you have any comments, thoughts, ideas, if you want to just say hi or whatever, we're 1-800-516-1220, or you could text your questions in 408-838-9060. And again, once again, if you go to reradiolive.com or to Stitcher, iTunes, any of those places, be sure to download the app RE Radio Live and get the podcast. All right, so the election, people by now might be a little burnt out and kind of overwhelmed by what happened last night. For me, my personal experience, it was quite a surprise. It really is, and I'm not going to get into which side and who did what and who's best for what. That's not my intention today. My intention of this show is really just to educate you on, simply provide you with some information and education regarding what the markets will be like on the real estate side and interest rate side with the Trump administration, where I think it will be going forward. It was certainly a surprising evening, and for some, very, very exciting. For others, maybe not so much. But history, for sure. Remarkable campaign. If anybody watched the final hours, which I'm sure millions of people did, it was exciting from the perspective of what happens when people decide to get out and vote, and what happens when people decide as a group, as a consumer, as a person, that you want change. For me, this was a big, giant vote for change. You could say whatever you want about the candidates, their personalities, one side or another. To me, this was a big, giant, we're lifting our arms up, we're kicking you in the rear, we're tired of your nonsense, we're tired of government as usual, we're tired of the mainstream BS, we're tired of special interests, we're tired of kickbacks, we're tired of corruption, and we want to see some change. That's what it was for me, and that's the way I saw it. So what does that mean for the real estate market, and what does that mean for the interest rates? Well, kind of interesting, late last night while this was going on, the aftermarkets in Wall Street, you may have saw that. I think at one point the Dow was, an after-hour trading, or was, I think at one point it was down like 700 or 800 points or something. Then it kind of recovered. Again, there was just that knee-jerk reaction in the market, which is very typical. Recovered back again, and I was thinking last night, I thought, gosh, normally when the stock market reacts like this, we get a reverse effect, and I'm thinking to myself last night, if there's any good news in this temporarily, is that usually when the market drops like that, or has some volatility or some nervousness within the marketplace, it usually results in improved interest rates. So I'm thinking when I come in this morning, we're going to get some improved interest rates. Just the opposite happened. We had an interest rate run-up today, and when I say run-up, 100 basis point basically to the worst. So rates jumped up quite a bit in one day, more than I've seen in a long time. Now, will they stay that way? I don't think so. I think they'll settle back down the next couple of days once people kind of catch their breath and come out of their comas or their trances or their whatever happens. It's funny to me, in a way, because, I don't know if passion is the right word, but maybe just the way people get exercised might be a good word, on either side, one way or another. I mean, I love passion, and I really respect and appreciate someone who has passion for something. I really do, but it seems that some people would act like these are life and death situations, and to me, I just don't get it. I don't. It's not a judgment statement at all. It's just a not understanding. Certainly, we have the right to vote. We should vote. I hope everybody did vote. We live in a free world. The democracy allows us to do that. We could pick and choose. It's a free country. We could start a business. We could do what we want. There's so much to be thankful for. There's so much to be thankful for. There really is. And I know everybody has different circumstances, and it's not, someone might be listening to the show that's been laid off, or they have an injury or an illness that they can't work anymore, or their health insurance costs just went up 50%. I know there's a lot of people out there suffering. I'm not saying that. I guess what I'm saying is take advantage, and I talked a little bit about this yesterday, take advantage of what you have, whatever it is, whatever ability and talent and gifts that you have. Take advantage of those and put them to work somewhere, no matter what it is. Whether it's occupationally, personally, relationally, put those to work and start focusing on things that make you happy and things that could move your life forward, instead of worrying so much about what our government or what our presidency is going to mean. There's nothing wrong with understanding that and wondering or being concerned and preparing yourself. What I'm suggesting is that I think a lot of people put so much time and energy and emotion into something that it's just something that you have very little control over other than a vote. You could go vote. If you went and vote, if you took the time to vote, and you took the time to educate yourself on the proposition, all the different things that you voted on, then you did the best you could do. Get back to work. Get focused on your family, your friends, your relationships, your life, your business, whatever That's how you can make a difference. You can make a difference. We can make a difference if we become part of the engine of the economy and we help the economy roll. We're not going to do much good if we sit in a corner and feel sorry for ourselves or worry about, oh, my God, my life is over because Trump's in office, or my life's over because Clinton's in office. I don't get that part. I really don't. I see the frustration. Okay, if you're a certain persuasion, you like a certain, okay, I get it. But the thing that really makes this country wonderful and the thing that makes this country unique and so exciting to me is there's opportunity out there no matter where you look, and it depends on how you look at that opportunity and if you take advantage of it. And there's a lot of opportunity out there. So my message today is on the real estate and interest rate side. I think this is a temporary, let's talk about rates first. I think this is a temporary, what it really is a temporary little blip on the chart. And my belief is that probably sometime next week or so we'll see rates settle again a little bit. Now, what the interesting thing is going to be is what is the Fed going to do the first week in December when the Fed meets? Will this mean that now that the election has been decided, will this mean that the pressure's off the Fed and the Fed will raise the prime lending rate? Could be. I think the philosophy is going to be different. You wonder if we're going to compare and talk a little bit about how this presidency might affect interest rates. First of all, I think that I think there's a better chance that the Fed will raise rates in December with a Trump presidency coming in January than I would if Clinton were to take office. I really do. I think if Clinton were the candidate, I think the Fed would be less likely to raise interest rates next month. Just my opinion. It really is. I think it's a philosophy of the different administrations and what's going on. But does it mean they will raise the interest rates next month? No, there's no guarantee. But there's word that there's a chance that they'll raise by a quarter. And again, just so those know out there, when they raise the prime lending rate, even though it's somewhat tied or directed to the mortgage, it's not mortgage rates we're talking about. This is the prime lending rate that's directly tied to home equity lines, credit cards, lending rates that are non-mortgage. Now, typically, they do have effect ultimately on the mortgages because when they raise the interest rate, the thought is the prime rate. The thought is that the economy's doing a little bit better. We're going to bring the rate up a little bit. We're going to try to stabilize, fight off inflation, those types of things. So what happens typically in those movements in that direction, you have mortgage rates that usually follow behind a little bit later, and mortgage rates will go up a little bit because of that. So, all right, we're going to take our first break. When we come back, we're going to continue. If you have any comments, questions, thoughts, this is the last live show, 1-800-516-1220. Give me a call or text 408-838-9060. Joe Cucchiara with Real Estate Radio Live. We'll be back with you in a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you for joining me this afternoon. Joe Cucchiara with Real Estate Radio Live, and doing the last live show for Real Estate Radio Live. We'll continue to provide you the content and information via podcast. Be sure to download the podcast. You can follow us anywhere, anytime, at your convenience, and RERadiolive.com is a place to get that, or you can go to iTunes, Stitcher, any of those places. But generally, in just an overview as the last live show today, going through kind of what the new election or the new presidency is going to kind of effect it might have on real estate and interest rates, but also just I want to take a couple minutes during the course of the show, too, just to thank everyone out there, the listeners, the people that participated in the show, again, I've mentioned we've received hundreds of emails over the years and phone calls and interaction back and forth by a lot of you. So I want to thank all of you for the support, the continued support, participation. There's so many of you that have called in and emailed and with a lot of kind words and thoughts. And I'm glad that it sounds like we did a good job at getting this information out and helping people, and that's what our main objective was. So we'll continue to do that. But mainly I just want to thank those listeners and make sure you understand how much I appreciate you, the person that takes time out of their day to turn on the radio or go online or listen to the podcast and listen to this, and hopefully you got something out of it, and I hope that you did. Anyway, so we started talking a little bit about the rates, and the Fed is due to meet, I believe, again in the first week of December, and the thought is that the question is, I should say, is she going to raise interest rates? Is Janet Yellen going to raise interest rates, excuse me, when they meet the first week in December? I think that there's more likely the chance that she will now that we have a Trump presidency than she would have if Clinton would have took office. The reason I say that, I just think that there's uncertainty. I shouldn't say this. My belief is that the markets in general, in the economies and the world economic balance, I think the thought to them, if we were to take the temperature of the global market right now, U.S. and international and abroad, the temperature would be a little nervous, a little uncertain, a little not sure, a little what's going on, not sure what to expect. And because of that, we may get the Fed that reacts that way. Now, someone might say the opposite. They might say, Joe, no, just the opposite. Maybe because of the uncertainty of the unrest and maybe people's, unsettled because they're not sure what to expect, that they won't raise the interest rates. What's funny to me is that, isn't it interesting that we consider that status quo, and isn't that the very reason people voted not to have Clinton, and not to pick on Clinton, it's just not to have the typical politician? Isn't that interesting? People are comfortable with status quo, but when you tell them that we're going away from status quo, people will say, oh, yeah, I want change. I'm tired of this person. I'm tired of this governor. I'm tired of this. We've talked about. But when you do change, when you go to change, people are uncomfortable with change. In general, the majority are uncomfortable with change, even the smallest change. And so I find it interesting that the markets take an approach, oh, my God, Trump was elected, so we don't know what to expect. But then if you look on the other side, there was a huge vote for change. So what people are saying, so you don't have anxiety, or you're not concerned if Clinton were in office. Isn't that interesting to think about that dynamic? So it's a little philosophical, of course, but that's what's interesting to me is the thought process here. It's something different, and that's really all it is. It's something different. It's a change. It's totally new. This is an historic time. People don't know what to expect. So I think that then when you don't know what to expect, you react and you're not sure how to react. And because of that, the markets are acting a little bit wacky. And we're probably going to have that for a while until we settle in. And but in general, I still would say the interest rates are going to stay pretty steady through the end of the year, and then going into the first quarter of next year. I think after that we may see another uptick, but that will remain to be seen, and we'll talk more about that when we come back. So I'm going to take another break. When we come back, we're going to get more into the housing. What does this mean for the housing market? And specifically, we'll stick to the Bay Area because, we're not experts in the economy as far as the housing market goes throughout the United States, but I think we got our finger on the pulse pretty good here in the Bay Area. So we come back, we'll talk more about the housing industry and how that will be affected potentially. If you have any questions, 1-800-516-1220, or you could text 408-838-9060.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you for joining me this afternoon as we finish up the last live show of Real Estate Radio Live. Again, today is the day. We'll continue to do the podcast. Be sure to follow us, RERadiolive.com. Download the app. That way you could get the podcast. Again, you get that anywhere if you go online and enter information about podcasts for RE Radio Live. You'll be able to easily find it and follow us. We'll continue to provide you the education information to make wise decisions in and around your real estate. We'll continue to do that. So, talking about the housing market and the interest rate, how that might affect the new presidency and as this takes shape going into 2017, how will this affect the Bay Area? We'll talk more so about the Bay Area because that's where we live and work, and that's the area that we need to understand what's happening if we're buying, selling, investing, and really trying to take a look at what our real estate portfolio looks like. First, I'll say, and you've heard me say this hundreds of times, my guess is, if you plan to either be in the Bay Area, either live here or have property here, or you're invested in this area, I don't think it is ever a bad time to buy. Just my opinion. I don't. Only because I've lived it. And what I mean by that, I've bought property at what people might say is a great time. And by the way, most time it wasn't by design. It was just pure luck. I know some people say that, they do everything smart and perfect, and I get it. But my guess is that doesn't happen a lot. I've bought properties at great times, but again, just by luck or coincidence. And I've bought properties at when markets were at all-time highs, that you just kind of get this pit in your stomach. You think, oh, my God, what did I do? Especially when the market dips a little bit or it has an adjustment. But guess what? If you take a long-term approach and view and you don't have to sell, most likely you'll be fine. I could tell you in the case where I did buy I purchased my primary residence in March of 2005. I want to say that the kind of the tip of the iceberg of the whole run-up was, I believe it was the summer of 2006, if I remember right, when it started coming kind of then the tailspin started. So it wasn't quite the peak, but it was close. It was a year or so away from the peak. Well, again, I didn't do it because of timing. I did it because we wanted to move and we wanted a place with a bigger lot and these types of things. So I purchased in 2005, and I'll just give you the details of it. The place we purchased was $1.3 million. There was a point when the market took a little bit of a nosedive. Now it was in a good area, solid area, but it doesn't matter. When we had the mortgage meltdown and went through all that, at one point that house was probably worth less than $900,000 in the market. Maybe. Let's just call it $900,000. It's a $400,000 swing. That's huge. Now, I didn't worry about it because I was living there. It didn't bother me. But what if I had to sell that? What if for some reason I had to sell that and I paid $1.3 million and I had to sell it for $9 million? Devastating, right? Not good. My point today, as we sit here today, that same house is worth probably 1.6. So what does that mean? That means that because I owned it, because I had a long-term approach, because I wasn't forced to sell, because I didn't panic, now it's back in a positive and plus and then some. And, who knows what 5 or 10 years from now will hold. I have other properties the same I could tell stories about. My example, the reason I give that is that I am a true believer that if you plan to hold a property, if your plan is to hold it long term, or at least 7 to 10 years, I truly believe it's never a bad time to buy in the Bay Area. Certain areas are different, but overall, the job market will continue to be strong. I really do think it will. I don't think there's much that's going to slow down the Silicon Valley economic engine here. They'll have flattenings, they'll have some dips, but it's just the signs are that business is going to be strong for the next 5+ years. All right, we're going to take another break. When we come back, we're going to continue kind of talking about the housing market here in the Bay Area. How will it be affected in 2017 with the new presidency? If you have any questions, 1-800-516-1220. I'll be back with you to continue in just a couple of minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you for joining me this afternoon as we finish up our last live show for Real Estate Radio Live today. Getting several texts. Thank you so much for all those people that are texting. I appreciate that. We'll continue to provide the same information to you just via podcast. Go to RERadiolive.com or sign up for download the app. You go to iTunes, Stitcher, Tuned In, any of those, or RE Radio Live. And that way you could continue to get this information and listen to it at your convenience, anytime, anywhere. We're talking about the effects of the new presidency and potentially what that might have on the housing market here in the Bay Area. Talked a little bit about interest rates. I still think interest rates are going to stay fairly steady. I do see them inching up next year. I do believe that if we were to take a look right now and just take a guess based on what's going on, and again, this is just a guess based on what could be happening potentially and looking at a lot of economic data, I wouldn't be a bit surprised if interest rates, 30-year money, this time next year, let's call it final quarter, last quarter of 2017, about a year from now, I wouldn't be a bit surprised if interest rates were more around the 4%, the 30-year fixed, or maybe 4.25. Right now, they're laying at about 3 5/8 or so. Today they had a little run up. Actually, rates went up today, probably an eighth in rate overall across the board, big time. Interesting. Talk about swings. Stock market after hours was down at 1.800 plus, and I guess it finished up today over 200 above the Dow, and it had a great run up. So what does that tell you? And we have a short memory. That's what that tells you. And also that interesting, had a negative effect on interest rates. Last night I would have thought interest rates would have improved today. That just goes to show you, because the stock market was taking a beating. Usually when the stock market takes a beating, a lot of the money goes more into a safe harbor environment, which means bonds, which means you get a little bit of a rally in the bonds, which means interest rates will improve. Usually, not all the time. But we see interest rates tick up today. Whether they'll stay there or not, I don't know. But I do think interest rates could be up by half or 5/8 by this time next year. Again, I would say somewhere around 4, maybe 4.25, which is still, historically speaking, wonderful cost of money. It really is. It's just not what we're used to the last couple of years, being in the mid to low 3s, and 15-year money being in the 2% range. Crazy. So my suggestion would be take advantage of it. Take advantage of the fact that money is so cheap, and if you are going to be here long term, and when I say long term, if your horizon is 7 to 10 years, and you're going to own a property, live in a property, invest in a property, I'm a big believer. It's never a bad time to buy. It really isn't. Never a bad time to buy if you're going to hold it long term. Now, an investment property is a little different. Most of the people that I see that are buying investment properties here are people that are selling their rental property and they're doing a 1031 exchange. So you have to go like property to like property. So you have to take a rental. And if you sell that, then you don't have to. But if you don't, it's huge tax consequences. Then you move that entire gain into a new property, and that's 1031 exchange. And most people will do that to avoid the tax consequences. So those are the only type of transactions I'm seeing for investment properties here in the Bay Area for the most part. And the reason I say that is you wouldn't consider a $1 million home and you say, okay, what do I need? Okay, I need to put 25% down, $250,000. I finance $750,000. Let's say my payment's, $3,500 a month plus tax and insurance. Let's just, for quick sake information, example. And let's say that I could get a renter in there because rents are pretty good. Let's just say, $3,500 a month. Could be more, could be less. The reason I'm running this real quick is that you could see why this is not a good proposition. You take $250,000 of cash money. Think about that. $250,000 is a lot of money. You put it into an appreciating asset of which you're not going to get any return on that for a while. And if it's an investment property, you're lucky to break even. You probably won't. You're probably going to take a loss of $1,000 or so a month for a while. So why would you take $250,000 that could be working somewhere else, put it in an asset that you're going to be losing approximately $1,000 a month on? Someone might say, well, Joe, that's a long-term approach. I realize I'm losing, but if I, buy that home now, 10 years from now, it might be worth $1.5 million. That's true. Could, might. You don't know. But I think it's an entirely different story if you plan to live there and it's your primary residence. That's a different story. And the reason I say that is that, that's tax deductible, the interest, the property tax. You're living there, whether you have a family or not. It's your primary residence, the place you call home. It's the place you go every day. You spend time, you invest in. It's a different story. That's why most people today are investing. When it looks at investing property, most people I'm seeing are going outside this area and in actually different states and maybe some to the Central Valley and different states, Texas, North Carolina, some places, Florida, different places. I'm seeing a lot of people because, out there in some of these places you could buy a place for $100,000, put 20 to 25% down. Now you're talking about $20 to $25,000, which is a lot less than $250,000. And guess what? You get some positive cash flow right out of the gate. Then you could start having a conversation whether this makes sense or not. That's a different story. So that's, when you talk about real estate from an investment perspective, that's something to really consider if you're looking at that type of opportunity. All right, we're going to take our last break for the last show, for the last time, live show. We're going to come back and finish up. If you have any questions, 1-800-516-1220. This is Joe Cucchiara with the Real Estate Radio Live. We'll be back with you in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you again for joining me this afternoon on the last live show of Real Estate Radio Live. Just a couple minutes left. Thank you again, all of you, for all your support over the last 6 years and comments, feedback, support. It's been wonderful, and can't thank the people of KDOW more. They run a great radio station show, do a wonderful job. Can't thank them enough for all their support. The teamwork, the people that operate the boards, the From A to Z, everybody at KDOW, continue to listen, support KDOW. They're continuing to grow. It's a wonderful, wonderful radio station. They talk about a team of people that provides education and information for people from a business level. You know, the Wall Street Business Network is KDOW, and they do a better job than anybody in the Bay Area to provide the airwaves and the ability to have people educate you, whether it's financial planning, taxes, legal services, real estate, mortgage, all kinds of different ways that the business leader allows you to do that. So I want to thank everybody from top to bottom at KDOW. They've been nothing but wonderful and supportive with me while doing the show for the last 6 years. That is for sure. So as we wrap up, be sure again, in terms of the real estate, I'll just summarize it. I think we're going to the interest rates are going to stay fairly steady, although I think a year from now we could see rates up around 4%, maybe a little bit more, and that's up about 0.5% where we are today on 30-year money. Real estate, I still think if you're going to be here long term, it's an investment. 7 to 10 years, never a bad time to buy, never at all. Obviously, if you're going to move out of the area, then now's a great time to sell because you're probably going to get a pretty decent premium for your home. And in many markets, you're going to be able to prosper and buy a lot more for your money. That's for sure. You'll get a lot more for your money in most marketplaces for sure. But really the final message will be continue to educate yourself, and we'll do that through our means. We'll continue to do that through podcasts. But my message to you, the consumer, is go out there and educate yourself and arm yourself with as much information and education as possible so when you make these decisions, you have a better chance to succeed. I see a lot of people, and we've all made mistakes. There's nothing wrong with the mistakes. We've all made them. But you want to limit the mistakes. So as it relates to real estate and mortgage issues, we're always here to help you. Remember, I'm in financing. I have close relationships with the real estate side, financial planners, tax planners, attorneys, landscapers, builders from A to Z. We could refer any of those people to you. I do it on a regular basis. The idea is that we're here as a team to help you in your real estate world to make those wise decisions and hopefully limit the mistakes that you make. So that would be my final message to you on the airways, but it will not be the final message as we move forward. Be sure, again, to go to reradiolive.com and download the podcast, the app. That way you could follow us and listen to the show continuing Monday through Friday. You can listen to it at your convenience whenever it will be released, again, Monday through Friday. I want to thank everyone out there for all your support over the last several years and also the team of people at KDOW, the Wall Street Business Network. This is Joe Cucchiara signing off for the last live show. Take care. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Tune in, log in, download our podcast. Discover more at reradiolive.com. reradiolive.com.